Welcome. This is Bitcoin Day Trading, the best Elliott wave analysis, episode number 46. Today, after the weekend, we are going to talk about the last move on BTC, which is a wave C and gets people really excited. So we are going to take a look at that and discuss it together. And to start, I have to show you, as always, my disclaimer. So here's my disclaimer. Please read it so that you are aware that there are risks involved in trading. And if you're interested, I'm offering live Elliott wave updates for 20 USD a month, which is an extremely good price. I myself would subscribe to it if I was not the person who creates the updates. I would subscribe for it, and I would be willing to pay 50, 100, or even more to get that constantly, every day, 1 to 3 times a day, most of the times more. I would be willing to pay much more money than that. So I think it's an extremely good deal. And if you're interested, you should go to my free Telegram group and just tell me that you're interested, and then I will provide you the instruction on how to become a member. And now we are going to take a look at the charts. So I've done some relabeling, and now I've switched both my accounts to bearish, because the bullish count that I the alternate bullish count that I tried to keep alive did fail. So now I'm only having the bearish count as my main count. I've got rid of the alternate bullish count. And on my bearish count, we had a double V, and we're in the process right now of accomplishing a wave X. And after that, we are still looking for a wave Y, which would terminate in the wave 3. Here you have wave 3. And then would terminate in the wave 4 from wave 3 top. I still think that that's the most probable count, probabilistic count, and I'm going to take a look at the smaller time frame to discuss this with you. So we went through our key level, the 64,300, and that made me relabel the chart. I've put a W here, an X here, a Y here, and an X here. And right now we are in the process of accomplishing wave Z. So if I look at that, the last wave, wave Z is subdividing in an A, B, C. And the C wave, as always, subdivides into 1, 2, 3, 4, 5, because the C wave always has 5 waves in it, except when it's in a triangle, it always has 5 waves in it. So it's an impulsive wave. And also, this structure is a zigzag. So an ABC zigzag, with wave C being the extended wave, the most impulsive wave. So it is normal that wave C is an impulsive wave, and it's normal that it has the characteristic of an impulsive wave. The difference is between that and a bull market and the bullish count is that it's only a wave C, and that it will be retraced entirely by the following waves that follow. So now Elliott wave is warning you. It is telling you that even though we broke resistance at 64,300, even though we went above the 0.786 retracement of wave W. Even though that happened, we are still below the 66,999, the top of wave 3. And you should be aware of that. And you should be aware that this, for now, does not look like an impulsive wave. And since that's the case, you should be aware that price could retrace the entire move here and go below 58,100. You should be aware of that. It's giving you a warning. If you ignore it, then you are trading something else than Elliott wave. Then maybe you have different indicators who give you different signals and you go with them. That could be, it's fine with me if you take RSI and other indicators and or moving averages and they are bullish and they tell you to go long, then follow your system, just go long. But Elliott wave says you that this is not an impulse wave. It looks like a corrective wave. The best labeling that I have for it right now with the data that is at my disposal is that it is corrective wave, that it's a wave X. So I'm expecting wave Y to retrace it entirely. And if you try to put if you try to say that that was the end of wave 3, of wave 4, okay? If you say that that was the end, then you are trying to put an impulse wave. So what could you do? You could put a wave 1 here, you could put a wave 2 here, and you could be looking for a wave 3. The problem is that wave 1 does not, the structure of wave 1 does not look impulsive. So that's the first problem. And the second problem is that wave 3 is not expanded enough. It doesn't go high enough to be an impulse wave. I mean, if you label it as following 1, 2, and you try to get a wave 3, then you get a wave 4 correction, and 4 cannot go in the price of wave 1. And if you subdivide, it will still look a little strange. So I think the probability that this is impulsive is low, because it looks much more like 3 waves. Here you see A, B, C. And then this is also an ABC, clearly an ABC. And this also looks like an ABC. So this looks like a corrective structure to me. So I cannot, I will not give it an impulsive look, and I will not declare this the bottom of wave 4, because it looks to me corrective. And since we have done that, we'll talk a little about trading. So I've exited my short position on that move, that flash crash, because it did not fit my outlook. And I did find it alarming to have got that flash crash. And then later you did get a second flash crash. So both of those flash crash were, the first crash was enough reason for me to exit my short position. So I did exit it with a profit. But after doing that, I asked myself, did I do a mistake? Did I exit the position when I should not have exited? And should I have kept my short position? And I did not just look at the result. I did not ask if I was profitable, or if it was a winning position or a losing position, that did not matter so much to me. What did matter to me is if I did follow my system. And my system did not tell me to exit here. I still did exit my position, but my system did not tell me to exit here. So I thought about what happened and if I did a mistake. And I came to the conclusion that I had to add a rule to my trading system. And the rule is the following one. I'll give it to you as I did write it into my journal. It says, if the waves do not make sense, example, flash crash, you can exit. So it's an exception rule. It's a rule that allows me to exit the position before Elliott wave turned bullish or my stop loss did get hit. It allows me on a certain condition when the waves don't make sense anymore, and this flash crash did not make any sense to me. So when that happens, it allows me to exit my position. But it is a discretionary rule. It means that it requires a lot of judgment from my part. It is not as simple as just following an indicator. And I use two indicators, as you can see on the chart. I use Elliott wave and the Fisher triangles. So this discretionary rules allows me to exit the position even though Elliott wave did not turn bullish and Fisher did not tell me to exit. It is an exception rule, and I don't like too much exception rules. So I must be extremely careful to use it only on rare occasions. But that being said, that's the first thing that I don't like with the current correction. So I did not like this flash crash, and it made me exit my position. And the second thing I wondered about is that if, as I showed you, because I labeled it for you, you guys asked me, if is at all-time highs, as you can see. And it was already at all-time highs here and here. So what I was wondering is why ETH gets at all-time highs while Bitcoin is still in a correction. So this made me also doubtful about the current correction of BTC. So ETH and the flash crash were the first two reasons that made me doubtful. And the last reason is that if we take a look at higher timeframes, so with you, because with my public members, I only take a look at the shorter time frame below 3 hours. I don't go up to 1 day, 1 week, or 1 month. But if I take a look at the 1 week, which I will not do with my public members, I only do it with my private members. But if I take a look at the 1 week and the 1 month, they are both extremely bullish right now. So I'm not eager to enter a short position because I'm expecting much more higher price if I look at my Elliott wave count on the 1 week and the 1 month. You get access to that if you require it by becoming a member of the private channel. So if you're a member in my private channel and you pay the subscription fee of 20 USD a month, then when you request it, I give you access to my weekly and monthly charts. But both of them are extremely bullish right now. The count is extremely bullish. So I'm not eager to play the short side right now, even though my Elliott wave on the 3 hour clearly says that we still have wave Y to accomplish and that this is not an impulse wave. If you look at it, you can see it quite easily that this isn't an impulse structure. But even though I'm not eager to enter a short position. Also, if you look at what happens seasonally, at seasonality, what repeats itself every spring, winter, or fall, etc., then you find that the period between Halloween and Christmas is a very bullish period most of the time. And right now we are accomplishing wave 5 of the bull market. So that's also bullish. So everything indicates that price should go higher. The only thing that is not indicating for now that price should go higher is Elliott wave on the 3-hour chart and lower time frames. And Elliott on that time frame still tells you that price have to go lower, that we have to finish wave Y. But if you look at seasonality, you also will see that November and December are most of the time extremely bullish month. And on top of that, we are accomplishing wave 5 of the bull market. So there again, I see a lot of room to the upside and a very short, maybe a very short correction to the downside. So I'm not eager to play in the when my outlook is that bullish, I'm not eager to enter a short position. I did enter a short position here, but as I told you, with the flash crash, I exited. And right now, I'm not too eager to enter a short position for wave 5. But that's my personal opinion. It's discretionary because you could play in the Y wave down, but I'm not eager to do it. So what I'm looking for right now is that my outlook changes. I want Elliott wave, which is still bearish. My main count is still bearish, to flip to bullish, and it will. It's just a question of time. It probably will this week, if not I would say latest next week, but it probably will this week already switch bullish. I'm not expecting to keep the bearish count for very long. So I'm waiting for my Elliott wave to switch bullish, my main count to switch bullish. And as soon as it does that, and I get a confirmation of Fisher, like I have here, the green triangles below the candles. When I get that, I will enter a long position to the upside, a leveraged long position to the upside. And until then, I will be patient. I will be patient and let it play out. And I have to follow my system. I already, as I told you, did an exemption by adding a discretionary rule and allowing myself to exit a position on when the wave count doesn't make any sense anymore. And that was the case with that flash crash. So that's already a discretionary act on my part. And now I must follow my system. I must follow my system as closely as possible. And I must wait for Elliott wave to turn bullish. And it will. It's just a question of time. It will turn bullish. And then if I get the Fisher triangles also turning bullish, then I will end up my next bullish position. Right now, as I told you, I'm not eager to play the wave Y down. Also, you could. It's a reasonable position you take. It's just that if I look at the weekly and monthly chart, they're extremely bullish, and seasonality tells you that price go higher. And other cryptos like ETH are already at all-time highs, and so there are a lot of things just telling you that price will go much higher. The only thing that does not is Elliott wave on the 3-hour chart. And for me, that's enough reason for not entering a long position until Elliott wave on the 3-hour chart flipped bullish. But until that happened, I will not enter a long position. that's what I want to tell you, just so you have an idea on what my outlook is and how I'm positioning myself. So I think that we are extremely bullish if we look at the higher time frames and seasonality, and even that ETH is already on all-time highs for the 4th time. So all that tells me that that Bitcoin should follow and should be bullish soon. The problem with it is that my outlook on the 3-hour chart is still bearish, and as long as that is the case, it gives me a warning that we still could accomplish and we still should accomplish wave Y. So I won't enter long position. I'm also not eager when the fundamentals are that bullish and when my outlook is that bullish, except on the 3-hour chart on Elliott wave. When everything points to the upside, I'm not eager to enter a short position. But that's my personal opinion. If you want to play wave Y, that's fine. That's up to you. That being said, as always, thank you for watching. Join my free Telegram group, and people behave quite nicely right now. They're not spamming it or trying to scam or promote their altcoins. So they are playing nicely along. So I think it's a nice place to be in. So join my free Telegram group. And if you're interested in my analysis and you would like to have live updates, I make them all the time. And you're interested in that and wanting detailed information and more than you get on the free YouTube interventions, then don't hesitate to tell me that you're interested, and I will provide you the instruction on how to become a member. And that being said, please hit the like button, and why not leave me a comment on YouTube. Have a nice day and see you tomorrow. Thanks for watching. Bye-bye.